Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 22nd of March 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as their global head of research and education. And sure, we want to have a look at the developments now after the Fed. And well, all in all, what I will make clear in a few seconds here, thanks to a look at the dot plot of the Fed, is that it's all in all a dovish hike. So hike is no surprise. That was something we expected, but it was where all in all it's a dovish hike, and the equity markets do not react the way you usually expect a market to react post such a all in all, at least between the lines, a dovish statement, respectively, such a moderate outlook here for upcoming events in terms of hikes. Nevertheless, what we mentioned during the morning meetings in the last days definitely was that such a dovishness in the statement itself could be something to worry about regarding the long-term outlook. Okay. The long-term outlook or skeptical outlook for the U.S. economy here, and that this could then weigh more heavy on equity prices. In fact, while the U.S. dollar stays under pressure, so pressure on the US dollar isn't something we really can see right now, not huge pressure at least, but nevertheless we can definitely see some pressure in the DAX, which is still all in all choppy sideways when looking at the hourly chart in a few seconds. But what we saw was that already yesterday there was some pressure which built, and which was building also in the morning, and there was a short push back here to new daily highs, only to see the DAX dropping again to this region now around 12,160 points. And all in all, I think this is a crucial level for the upcoming hours. In fact, what you can see here is that here the DAX also slightly below that, around 12,130, 12,120 points. That's the low of the last trading week. That there is a chance that the DAX could really fall off a cliff, if you want, and that there is some serious dynamic then coming into the market. And let me just show you now this dot plot first. Probably that makes the most sense. By the way, here you can also already see that within 1 day, for example, that was starting here at 1 sec. Yeah, from yesterday onwards, exactly. So that was 8 p.m. in this case. Yes, it was 8 p.m. And overnight here, obviously, there was some pressure building in 10-year yields. So we are not talking about a huge drop. Nevertheless, some a drop which can be seen here. I mean, on Tuesday, the closing price was 2.89, around 2.9% on 10-year yields, and then we dropped to as low as here 2.84. It's only 6 basis points. Nevertheless, that's already quite much, and already shows that there is some dovish interpretation of the Fed. And therefore, now let's have a look here. I've prepared this. It's a tweet from Zero Hedge. The December plots and the the December dots and the March dots, and it's interesting to see here for 2018. This is there that the majority of the Fed officials sees the Fed hiking rates to 2.2.5. So within the range, we should usually in 2018 see a hike to max 2.5%, let's say, but with a majority voting for only 3 hikes, with the first yesterday, so only 2 hikes upcoming then in the upcoming months. And that's something you can already see here, even though it's not a huge difference to what we've seen yesterday, but you can clearly feel it that the market is starting to be a little skeptical about the long-term outlook. That's also something you can clearly see when you look at the performance from gold, for example. So gold pushed aggressively higher yesterday, and that makes perfect sense with a more dovish outlook here, which somehow indicates that there is some skepticism building around the economic growth, let's say, or let's say momentum the U.S. economy is capable to hold up here, and with this in mind, I think the overall explanation for this current DAX performance, but also for the performance of the U.S. equity indices, is something to probably worry about into the weekly close. So in fact, I mentioned, even though it's only in German available here, I mentioned something which I want to translate to you. That's on the research website here from JFD Brokers. You can also, by the way, find English articles here, but right now I'm referring to the one I wrote in German here. And let me just translate this paragraph here. So the intraday advantage, I would see it on the DAX reaction on the all-in-all dovish rate hike of the Fed here on Thursday. I'd see this advantage then on the downside, and this is something which obviously could be expected. Let's say it's definitely something to expect. Right now, it's no need to worry for the bulls, but this could change dramatically once the DAX starts an attack around 12,120 to 130 points. This is the region around the weekly lows from last week. And the interesting thing is that it mainly depends on what the US equity markets will deliver. So all in all, the performance overall is still choppy. It's not that we have a clear bearish or bullish tendency. But it's definitely visible that there is some serious chance that we could get to see a push here to the current weekly lows, which we find around 24,450 points. And if we push below that level, there's further room down to 24,200 probably. So all in all, this is not ultra bearish or something, but it's definitely something to worry about, especially when looking at the current situation in the DAX and the fact that we've initially reacted bearish, but we're capable of making back those losses with new intraday highs, but only to see the market drop to this region again. So to me, this is a sign of weakness, and chances are increasing that there will be at least an attempt to attack this region around 12,120 points, probably already before the US market opens. And if we make it here through this level on the downside, again, the next target, if it's a target at all, probably the DAX can really fall off a cliff here and really see some serious weakness. But I think a test of 12,000 points is then a high chance and something to consider here. And based on that, I definitely don't look for long engagements currently intraday in the DAX, but in fact only for short engagements. And I think, again, chances are good. And with the US markets opening then in around 2 hours from now, 2.5 hours in fact, I think that from there we could get to see some nice interesting price action. And again, if we fall below the weekly lows from last week, then there is further room for another 150 points on the downside, down to 12,000 points here in the DAX. So yeah, that's it on the DAX. In fact, this is the most interesting thing to watch right now, most interesting market. If you look here, for example, at the Euro USD, what you can clearly see is that the market is still showing some choppiness here. The US dollar now can make back some of these losses from yesterday. It has seen, not only against the euro, but also against the Japanese yen, also against the British pound, for example. But, and this is the thing, the fact alone, I think, that the chances of a breakout of this range, currently at least, on the downside and below 122, now are diminished because of this dovish, potential dovish interpretation of the hike from the Fed, is something which could also put, at least build some pressure. Not sure if it's really pressure, but making it more unlikely that the DAX can really attack the region around 12,470 to 12,500 points. But instead, is testing test of the downside is more likely here. Nevertheless, I don't have a big opinion here on Euro USD because of this overall choppy picture we get to see. Situation is a little different here in the dollar Japanese yen, which is currently pushing towards 105.50 again and attacking the region, which could be also for short-term traders considered crucial. If we make it below 105.50, there's further room down to 104.50, probably another 100 pips. This could also go hand in hand with potential risk aversion building. So if there's really pressure in US markets coming up, probably with some nervousness, Japanese yen could see some further gains then into the trading day, and could be a potential outperformer probably. Not just against the US dollar, but also against other counterparts. Yesterday, as already mentioned during the morning meeting, I said that if I had to choose one currency to trade the US dollar against, then so going long this currency while shorting the US dollar, I'd say that I go for pound sterling. And in fact, yes, pound sterling really outperformed yesterday, made it above this high here, around 141.30, 131.50. It's now coming back a little, probably due to the US dollar gaining some momentum. But all in all, and this is the thing, I really like this pullback, since if we continue this pullback probably down towards 140.60, 140.70 here, the downside, this is a potential long trigger, and everything currently above 139.80, 140 should be considered long. So I think a retest of this region with a push higher then, and making new highs could easily bring us probably into the weekly close up to 142.70, 143 probably. Potential driver 1 hour from now is the Bank of England. Let's see what they deliver. What we can already say is that they are considered to be hawkish into the upcoming months here. This is a picture which I found here from John Kickleiter, showing the central banks G7 currency universe, and then the probability of a 25 basis point rate hike by end of 2018. And in blue, it's clearly the Fed, 100% chance nearly that there will be another hike. Second place is for the BOC, and the third one, and seeing a slight push here higher, is the Bank of England. So all in all, market participants are expecting a rate hike. So the thing is, and this is something we should probably look at then when the Bank of England comes out with a statement, what market participants probably will look at is, will there be a chance of another hike? If not, it could be that this initially acts as a negative surprise. I'm not sure if it's a surprise, but negative. It's probably considered negative from market participants in the first place. This could initiate such a push on the downside. But if we see this push on the downside, carefully watch this region. Probably it's only a first reaction, and with then with a deeper look, let's say, we probably found out that nevertheless it doesn't say that there is not a chance of a second rate cut. And on top of that, in 2018, and on top of that, there's also potential probably, in comparison to the other currencies, especially probably right now against the US dollar, that the pound sterling, with the outlook to see probably some further capital inflows in the United Kingdom based on the outlook of a softer Brexit, whatever, that here against such a push lower against 40.50, we'll find buyers which push us then back above 141 and into a bullish close of the week. So all in all, I think pound sterling still has some room and some potential on the upside, and it's, I think, by far the most interesting currency pair right now to watch, respectively currency to watch. Currency pair pound sterling dollar, yes, why not? But also interesting probably to watch here Euro GBP, which is right now seeing push on the downside towards 87, and if we make it sustainably below that level, there's further room in the upcoming weeks to months to 83, 83.50. 83.30, 83.50 probably, the region around the lows from 2017 here. And finally, let's have a look at gold. There was also a very strong reaction in gold yesterday. No surprise, even though the overall technical picture did not change. So everything below 1,340 USD per ounce still considered to be neutral, let's say. If we break above that level, for whatever reason, probably because gold will take on further momentum, because some risk aversion is building, same reason as for the Japanese yen probably gaining some momentum, whatever. If we can make it above that level, next target can be found around 360, 365. So what we can definitely say is that yesterday is all in all underlining the bullish outlook midterm in gold here, and increasing the chances that there will be more likely a break on the upside above 1,360 to 365 instead of a push and test of the region around 1,295 USD per ounce, at least right now. And that's it from my end. So happy trading. Watch your stops, and talk to you again tomorrow in the morning meeting, 10:30 a.m. GMT. I'll definitely look forward to it. Take care. See you, and bye-bye.